Hello friends, welcome to a new edition of Proficient Webinar. Uh, this is Shumoy Goswami, and today it is 3rd of August 2018, Friday. Market had closed just an hour and a half ago, and we closed at yet another lifetime high, almost on a new lifetime high on daily basis, and actually on a new life high on weekly basis. So before we start our weekly analysis, and I'll be giving you a few stocks to trade for our next week, both some stocks to trade from long side and short side. Let me show you the global perspective as usual, how the US markets have been doing for past 1 weeks and how it is likely to do going forward. And then we will take a look at the US dollar index, and then some global commodities, and then we will return to our domestic equities. So first of all, let us start with dollar index, or let us start with the global equity market, the US S&P 500, which is the large cap index. You can see on my screen the daily chart of S&P 500, and the index is actually trading at its 1 year high, nearly 1 year high, not at its lifetime high, but the trend is pretty clear, and there is a strong uptrend. The index have been making higher bottom formation on daily chart for past several months. It is trading very comfortably above all the important moving averages like 50 and 200-day moving averages. Only once or twice there was a little bit of penetration of the moving averages. Suppose in the 4th week of June or in the 1st week of April, but those violations actually did not continue in the downside, and uptrend resumed. Right now, is S&P actually trading in a strong bullish trend, and last Thursday it closed at 2827 region. So 2827 region, 2800 actually is the support for S&P 500, and unless that level is broken, there is no threat to the short-term uptrend for the S&P 500 market. And last week's high was at 2850. So once that high goes out, it is likely to resume much more momentum going forward. So global market perspective is bullish, and let us see how the dollar index have been doing for past several days. So here it is, the chart of US dollar index, and the dollar index was actually quiet for past 2 weeks, for past 2 months, from last week of May to last week of July, and only very recently it has given a breakout, or almost it looks like a breakout in the short term. It is trading at nearly 95 region, and looking like a breakout. It has taken support from its 50-day moving average, trading above both the important moving averages, so trends are very strong. So what is expected to happen in equity markets, and especially in global commodities, if dollar index rises? See, since the commodities like gold, like crude oil, like silver, all these commodities are mainly denominated in dollar terms. So if dollar rises, they will see some weakness because they enjoy some inverse relationship with dollar. So if dollar index rises, which means actually dollar have strengthened over the past few days, so it is likely that gold, crude oil, and silver will see some selling pressure. 94 is the important mark for dollar index. If 94 is not broken, where actually the last few weeks low resides, and also the 50-day moving average actually is protecting that level. So as long as it trades above the important value of 94 region, we cannot see any weakness in dollar index. And going forward, if dollar index does not weaken, then there will be some selling pressure in crude oil and gold. Let's see how those important commodities are panning out. So let me open the chart of gold. So this is the chart of gold. Uh, Yesterday's closing price was $1,220 per ounce, but right now it is trading even lower, uh, below 1,210, almost at $1,207 per barrel per ounce mark. So the weakness is continuing in gold, as that is expected from the strength of dollar indexes. Dollar index is rising. Chances are that gold and all the important commodities will see some selling pressure, and that is exactly what we are seeing on the chart. 1210 or 1208 is what where the gold is right now trading, and 1200 is definitely a psychological support level, which if broken, the intermediate downtrend in gold will become a primary downtrend. Let's look at the longer term chart of gold, and here it will be more apparent. Yes, from once $1,250 per ounce mark was broken, nearest support was at 1200 region, and that is exactly where gold is right now trading. And if even this support goes out, then might be there will be some pullback upward because it has been extremely oversold in the short term, but longer term target for gold in that case becomes the 2017 January low price, which is at around 1140 region. So definitely gold in that case will slip into a primary downtrend. Some intermediate pullback is possible, no doubt about that, but that is not going to change the overall weakness. We are returning back to the daily chart, and we can see that the short-term moving averages, which is the 50-day moving average, is actually trading below the longer-term moving average, 200-day, and it is 1260 region to 1250 region where an important resistance has been established. So in case there is a pullback, gold will see some resistance at that region of 1250, and we can take another short position out there. So overall target for gold, the downtrend of gold will become 1140 region in that case. So let us see how crude oil have been panning uh, recently. This is the light sweet crude oil. Hmm. Yeah, so it is trading choppily for past 2 weeks. Overall trend is upward. The primary trend is upward, no doubt about that. Since it is trading above the important moving averages of 200 day. Not only that, the higher bottom formations are also easily seen on the daily chart as well. But for past 2 or 3 weeks, it is showing some signs of choppiness, and 67 level was briefly violated, although it did not sustain there. But as long as crude oil stays above that region, that is $67 per barrel, and chances are high then that the primary uptrend will resume, and once it goes above 70 mark, which is the $70 per barrel mark, the chances will increase that the previous top of 75 will be revisited sooner than later. So although there is some weakness, there is some strength in dollar index, which means there could be some selling pressure in crude oil. That is not as apparent on the daily chart of crude oil. And if 70 is broken upward, then the view will change and 75 will become the target. On the other hand, if 67 gets broken for crude oil, then the 200-day moving average, which is at $63.5 per barrel mark, that will become the nearest target for crude oil. So that is our intermediate term view for crude oil. And having said that, now let us see how the equity market back home, that is our Nifty and various stocks, fared in the past week. So let us open the chart of Nifty. Okay, this is the chart of Nifty. Here we go. This is the hourly chart. Let me change it to daily version. Yeah. So we can see that prices have closed at another lifetime high, both on daily basis and weekly basis. And most surprisingly, yesterday's big sell-off is completely taken care of today. And even prices opened some 50 points higher. So on hourly chart, there will be a big gap up. So that is apparent. And that is a testimony of the strength that the market is showing right now. So intermediate trend is bullish. Primary trend is bullish. And yesterday it established another support region, another higher bottom region at this kind of level, 11,200 region. So right now we can say that as long as Nifty keeps above this level, the 11,200, chances are high that the strong momentum will continue. Intermediate term trend will weaken only below this level, right? So we will assume that this level will hold for coming week, and if that is the case, then what are the stocks that are most likely to outperform next week? The market has been extremely narrow ranged, extremely market breadth is extremely poor, although very recently there is some recovery in mid-cap stocks. The mid-cap index has been shown some signs of recovery. Market breadth have improved a bit for past 2 days, but there is no sign of any confirmation as yet. And the broader market, which is actually dominated by the large cap stocks, are expected to outperform the overall general market. So market breadth we expect going forward will remain weak, and only it will be seen stock specific actions across the board. So we have to be very accurate in our stock selection, and there are few stocks that we find likely to outperform the market on the upside, provided 11,200 holds next week. And these are the stocks that we have short selected for trading next week. There are some 8 or 10 stocks that we have selected here. First is Obviously, the FMCG sector-wise, FMCG stocks have been doing exceptionally well. There are likes of Dabur, there are likes of Hindustan Unilever. Dabur, after coming up with its result, which was excellent, have shown a tremendous momentum, and it has given some 10% return in the past 2 weeks, and prices are very likely to continue higher in the longer term, but in the short term it is a bit overbought. Some pullback is going forward, so we are not including Dabur right now because it has been extremely overbought lately. But Hindustan Unilever is definitely a buying candidate for us next week. And Hindustan Unilever, after making a top at around 1750 some 3 weeks ago, actually retraced some 5% or 6% and came down as low as 1650 region. But past week's price action suggests that the pullback is likely over. Also, the stocks closed at another life high today, which is 1760 region. This is another life high, and the last bottom is established at 1660 level. So as long as the price stays above that region, Hindustan Unilever, the primary uptrend is likely to continue. Another stock is there, which is Jubal Food. Let us see how that stock has performed. Yeah, Jubal Food is also excellent chart. Longer term trend I have shown many times, and the stock has been outperforming for quite a very long time. 1400 was the last bottom where it has taken support. Right now it is going towards 1500 region. So any pullback will be buying opportunity. 1440 to 25 will be a good opportunity to enter long. 1400 will be the stop loss. 1500 will be the target. So Hindustan Unilever, Jubal Food are the stocks from the FMCG sectors. There are many stocks from private banking sectors as well, like Yes Bank. Let us put up the chart of Yes Bank here, and you can see how this stock actually took the hit and retraced from 395 region to 360 odd levels in only 2 weeks, and today it again showed signs of recovery. So this recovery will be toward the direction of the primary uptrend. So higher prices are expected going forward in Yes Bank, and 355 will be the level to where we can keep the stop loss. 373 is the current price. 400 will be the target. So overall, primary trend continues, and depending on the primary trend, we are entering at the end of a pullback. So here we find the reward to risk ratio as the best one, and Yes Bank qualifies as one of our next week's targets. Target long candidate. Not to forget about HDFC Bank. HDFC Bank is also in an uptrend, and but for past 4 or 5 days, the stock actually has taken a hit and pulling down to some 50-day moving average, and this level, which is 2100 level, is actually a strong support level, right? So we can expect the stock to resume its primary uptrend from here, but that will be confirmed once 2150 level will be taken out. So we can recommend HDFC Bank only above 2150, not earlier than that. And if that happens, then today's low, which is around 2115, that will be the stop loss. And if the primary uptrend is likely to survive, then 2200 will be the nearest target for HDFC Bank. TCS, which belongs to the IT sector, is also a stock that catches our fancy. And TCS actually saw some selling pressure from 2000 odd level to 1940, and from there it is resuming the uptrend. The resumption of the uptrend is not as comfortable. There was some volatility yesterday. Only the stock fell over 2%, but this week's low was not broken. It was never broken. So 1930 or 1923 level should be the stop loss, right, for TCS. And the previous top, which is at 2010 or 2020 odd levels. Those are the nearest target for this journey, and if this level is broken upward, then even higher prices are possible for the stock. Consumer durables, this is another sector that is looking very good. There are two stocks in this category that I would like to show you. One is Havells, which again closed at a lifetime high. So these are the stocks that closed at lifetime high, like the Havells, like Hindustan Unilever. But this is not true for all the stocks. So the market is really extremely stock specific, and we have to concentrate where the action is. So in Havells, there is some momentum. There is a strong momentum, and the stock actually saw an upward breakout in last week of July only, and the stock has appreciated quite a bit. That is the result. That is the result of a quarterly numbers. It showed up some good quarterly numbers last week, and 640 is the current level, and one can add this stock on pullback. If you buy it here, you can also buy it on a pullback. Overall, longer term uptrend is extremely reliable. You have to create a core position, and you have to build some secondary positions around that for this stock, because since the stock is extremely overbought right now, it is possible that some pullback is possible. Some pullback takes place next week, but that does not reverse the primary uptrend. So Havells also stays there as one of our primary buying candidates, and so is Asian Paints. This is the stock of Asian Paints, also a stock in consumer durables sector. The stock is in strong uptrend, no doubt about that. Some higher bottom formation and higher top formation is clearly seen in the chart, but the stock is right now undergoing through a pullback phase. So as long as this pullback is going, there is no point to jump into the stock. This pullback will be, the end of the pullback will be confirmed once the stock goes above last day's high, previous day's high, which is as of now at stays at 1425 region. Or it may even come down if Monday's low is even lower than that. So we will have to follow that previous day's high, and once it crosses previous day's high, that will be a good point to enter. That will be the point where we are trying to spot the end of a retracement during a primary uptrend. Intermediate support holds at 1380 region, so we are not expecting that level to be broken anytime soon. So one can keep a stop loss at that level, and Asian Paint is also there in our buying list. One stock that I will like to take a contrarian opinion is Canara Bank. That is also, although it is not in the private banking sector, it actually belongs to a PSU banking sector. But looking at the chart, it gives a feeling that a 6 month or rather a 5 month old consolidation phase is actually coming to an end. Last 2 weeks saw some strong momentum on part of the stock, but the stock has actually closed at its 5 month high. So this is a bit surprising given the overall weakness in the PSU sector. Canara Bank is not showing any more renewed weakness, and it is trading comfortably above the important moving averages. So chances are high that we have seen the worst for this stock, and the stock is likely to go higher from this level, especially since the 6 month or the 5 month resistance have been broken, and that even that with some good volume. So there is a strong possibility that Canara Bank in the longer term has created created an important bottom, and going forward it will rise from here. So these are the stocks that we find next week. If Nifty stays above the level of 11,200, uh, these stocks are more likely to outperform the overall general market. But as I told you earlier, all the stocks are not performing equally violently. Then there are definitely some underperformers. And in case Nifty breaches 11,200, some of these underperforming stocks that I'm showing you one or two examples will be good to trade from the short side as well. First among them is Ashok Leyland. Here we go. This is the daily chart of Ashok Leyland. Primary trend, I'm not talking about the primary trend, but intermediate trend is definitely down for the stock, right? It has created a top at 165 and then made low at as low as 105. So this was the intermediate downtrend, and for the past 2 or 3 weeks there was some pullback, some dead cat bounce was seen, and today this dead cat bounce seems to have ended. Although market was up by more than 100 points today, Ashok Leyland did not show any more additional strength. It continued to stay below the 50-day moving average, which is confirmation of the intermediate term downtrend to continue, and higher prices today was summarily rejected. This morning, Ashok Leyland was trading at around 122 odd levels, but closing was very weak. It closed at 118 odd level. So chances are high that going forward, the dead cat bounce that we saw this week will be fizzled out, and if it violates Thursday's low of some 116 level, then it will be more or less confirmed that the intermediate downtrend is continuing, and the previous low, which was established at 105 odd levels, are likely to be revisited. So that is one stock that will be in our watch list next week. If Nifty goes below 11,200, this will be one of our primary candidates to trade from the short side. And last but not the least, Tata Motors is also a primary shorting candidate. The stock is in renowned primary downtrend. It has broken many supports, and the last support of 250 are also likely to wield. The price today closed at 258, and this is also some 1% lower or 1.5% lower, and that happened in spite of the overall bullishness that the general market saw today. So the primary downtrend continues in Tata Motors, and top, an intermediate top or a minor top rather, has been established at 270 odd levels, which continues a series of lower tops. So as long as Tata Motors lows stays below this important top of 270, the intermediate and primary trend remains downward. The 50-day moving average is 278 odd levels. So only above 278 odd levels, the intermediate downtrend will be fizzled out, or that will be the first sign of so. So Tata Motors remain as a shorting candidate. There is no point in thinking about the valuations. The valuations may look cheap, but that doesn't matter. Once a trend has been established, it is likely to continue in the direction. So you can sell it on pullback. 270 will be the stop loss, and 250 will be the target. But this will become more important if Nifty stays below 11,200. If the overall market remains bullish, maybe this stock is not going higher or not going lower, remains as it is. So it is important to trade in the direction of the market. it is important to trade with stop loss. Almost all the recommendations that I have given them with a stop loss. Trade carefully, trade with your proper risk management. I hope you will be benefited from these suggestions. I hope you enjoyed. See you next week. Thank you.